Well, this is part two of our discussion around the ADP non-farms payroll report versus the BLS's non-farms payroll report. And we have the first side of this has just come out. And it's interesting the reaction that we're seeing. So the report is a positive 9,000 jobs. Now that sounds good, doesn't it? But the problem is that we know that the standard of error or the possible statistical error in either of these reports is very large. This is compounded with the problem that investor sentiment is very caught up with not necessarily the number, but this. Is it positive or negative? So right now, we know just based on a statistical analysis of this number that not only is this meaningless, but the number could really be just as easily negative as it could be positive, because as investors spend so much time worrying about the positive or negative sign in front of the number itself, that really means that your baseline here is zero. So it could be just being 9,000 jobs above zero really doesn't mean that there's any real surety or confidence that this number actually is positive. So if something is very difficult to look at on a case-by-case basis, it's much easier and more reliable if you trend this kind of information. That's going to be a lot more reliable as you get, rather than isolating one particular announcement. However, let's look at two charts, because it doesn't matter whether or not this announcement is statistically relevant or is easy to debunk or whatever it is. It really doesn't matter. What does matter is what are traders reacting to it. And there's two things we should be aware of. So first of all, here's the first chart. This is the S&P 500, which as you can see has already responded very nicely to the news, and we've got a little bit of a rally today. Well, if we change gears here just a little bit and we're going to go over into the Forex, what would this affect in the Forex? Well, it's going to adjust risk. That's why it's affecting equities. So what's going to be the currency or currency pair that's going to be most sensitive to a change in risk, particularly as it pertains to equities and corporate growth? And this is the ADP report is a direct reflection of corporate growth, no matter how inaccurate it is, because it illustrates how are they hiring or firing, as the case may be. Well, here on the dollar yen, so we're seeing short yen positions improve a little bit. In fact, if we broke this chart, this is a daily of the dollar yen. If we looked at this on an hourly basis, the rally up from initially a little bit of a drawdown overnight actually was triggered just as this report started hitting the press, hitting the email addresses of people who had subscribed to it. So we have this, we know that there's an immediate reaction to the fact that the number's positive, it's a little bit better than expected. Doesn't matter that it's irrelevant. But that is actually a good point, because as we take a step back and we say, all right, well, so the immediate reaction was very positive to this. But the issue is that most traders are going to look at this, they're going to say, experienced traders are going to say, well, it's certainly the sentiment has a short-term influence on the market. However, we have the dollar yen at resistance, we have equities in overall a significant downtrend, there's a lot of downside pressure right now, there's a lot of risk to the downside. This is really not going to have a lot of play in the long term. So that is something that you'll find very typical with announcements that have very limited meaning, is that you'll get this initial reaction to it, and then long term they have almost no predictability whatsoever when they come in with a report like this. Now, if we were seeing something that was outside of this range, I mean, maybe we saw a positive 150,000. Now that's a little bit different story, because then we have a much greater level of statistical certainty that in fact there is job growth happening. But we did not get this. We got 9,000 jobs, which is so close to zero it might as well be zero, which means that it's largely random. We can't say with certainty whether it was negative or whether the real job growth number, not the one statistically sampled, but whether real job growth, which nobody knows, was negative or positive. So long term, probably no effect. We're going to have to start looking at some of our other fundamentals. Short term, I would expect to see a little bit of a continued rally. We may even just poke our noses above resistance on the dollar yen temporarily, but without something else fundamentally coming in to push us up above that resistance level, we could get turned back here quite easily, which means that I think it's legitimate to start looking at covering some of our risk. If you're short the yen right now in any position, including against the dollar, with a long dollar yen position, it may be wise just hedge against that risk a little bit in the near term.